Welcome to our first live chat this week, where the discussion will be on Ferrari's initial public offering. In this case study, we'll explore the dynamics of Ferrari's 2015 initial public offering, or IPO, decision, which was part of Fiat Chrysler Automobiles, or FCA. That was part of their strategy to separate from Ferrari and raise some capital for themselves at the same time. First, a brief introduction to Ferrari and the high-performance automobile industry. Ferrari is an iconic brand in the luxury sports car segment, renowned for its high-performance vehicles and rich racing heritage. Understanding Ferrari's strategy involves examining its niche market positioning, brand value, and the economics of the high-end automobile industry. An overview of the case study. Case 46 provides an in-depth look at Ferrari's financial and strategic standing during the time of the case. It presents an opportunity to analyze how a luxury brand balances exclusivity with the pressures of growth and financial performance. The luxury car market dynamics. The luxury car market is characterized by high-income consumers, a focus on brand prestige, and a unique set of economic factors. You should consider how these dynamics influence Ferrari's marketing, production, and innovation strategies. Financial considerations. Ferrari's financial situation, including revenue streams, cost structures, and investment strategies, will be pivotal in this case. Your analysis should delve into how these elements support Ferrari's business model and its overall corporate strategy. Strategic challenges and opportunities. The case will outline the strategic challenges faced by Ferrari, such as maintaining exclusivity while also expanding its market reach. It will also explore potential growth opportunities, including new product lines, market expansion, and branding initiatives. You will be tasked with evaluating Ferrari's current strategy and financial health, identifying potential risks and opportunities, and proposing strategic recommendations for the company's future. The goal is to apply financial and strategic analysis tools to a real-world context. Engage with this case by thinking critically about the brand's value proposition, competitive positioning, and the role of innovation in maintaining market leadership. Prepare for a robust discussion that will cover topics ranging from financial analysis to the intangible aspects of brand equity. Our goal with this case is to apply corporate valuation techniques and assess Ferrari's strategic decisions. Here are the key objectives which we will focus on. Institutional aspects of equity issuance. Understand the equity issuance process, especially in the context of Ferrari's spin-off from Fiat Chrysler Automobiles. Valuation skills. Use discounted cash flow, DCF, and market multiples to value Ferrari and assess its IPO price. Evaluating comparables. You will develop skills in selecting comparable companies and adjusting valuations for differences in business models and growth prospects. Strategic decision making. Analyze the costs and benefits of Ferrari's initial public offering, considering its impact on both Ferrari and Fiat Chrysler. Financial implications of Ferrari's initial public offering strategy. Let's start by considering Ferrari's strategic direction and its financial implications. Separation from Fiat Chrysler. Ferrari's IPO was a key part of FCA's plan to spin off Ferrari and use the IPO proceeds to strengthen its own financial position. The relationship between the two companies is important here. While Ferrari gains strategic independence, FCA aims to capitalize on Ferrari's market value. Growth versus exclusivity. Ferrari has long maintained an exclusive brand by limiting production, but Chairman Sergio Marchionne's strategy to increase production to 9,000 units annually challenges this approach. We need to consider how this shift might affect the brand's perceived value and financial performance. Proceeds from the IPO. It's crucial to note that the IPO proceeds went directly to Fiat Chrysler, not to Ferrari, which means Ferrari itself did not benefit from new capital for expansion. Let's evaluate the pros and cons of the Ferrari IPO. Pros for Ferrari. The IPO could provide Ferrari with a strategic form of autonomy, allowing it to pursue its unique vision and business model without the constraints of the broader Fiat Chrysler corporate strategy. A pro for FCA. The separation allows for a financial restructuring that could be used to pay down debt or reinvest in other segments of the business, potentially improving financial ratios and shareholder value. Some cons. For Ferrari, going public can bring about increased scrutiny from investors and analysts, requiring more transparent operations and potentially pressuring the company to focus on short-term financial metrics. A downside for Fiat Chrysler, losing Ferrari could mean relinquishing a profitable luxury segment and a brand that has significant symbolic value, potentially affecting FCA's market perception. Some financial strategy considerations. Let's discuss how Ferrari's IPO aligns with its growth plans. The IPO is a significant move for Ferrari, providing a pathway to expand beyond its traditional production limits while still trying to maintain the brand's exclusivity. By going public, Ferrari gains better access to capital markets, which can be crucial for financing new technologies, ramping up market efforts, and expanding into global markets. It's an opportunity to leverage this newfound visibility to fuel growth, but it is not without risk. Think about the production increase to 9,000 units per year that Chairman Sergio Marchionne proposed. This shift is particularly important. It enables Ferrari to meet the rising demand, especially in emerging markets like Asia. However, it challenges the brand's long-standing tradition of scarcity and exclusivity. The question we need to ask perhaps is whether Ferrari can balance this increased production with maintaining its luxury image. Is there a risk that by making more cars, they might dilute the brand? When we consider the investment implications of the IPO, it opens up several possibilities. With the capital raised, Ferrari could invest in cutting-edge automotive technologies like hybrid or electric powertrains. These investments would align Ferrari with broader industry trends towards sustainability, which is becoming increasingly important even in the luxury car market. It might help attract a new kind of affluent customer, those who want luxury, but are also conscious of their environmental impact. There's also the opportunity to boost Ferrari's global marketing efforts. With additional resources, Ferrari can ensure that it remains the brand of choice for luxury car enthusiasts, not just in traditional markets, but in growing regions as well. This could help them maintain a strong competitive edge. Broader market implications. Now let's speculate a bit on how the market might respond to Ferrari's IPO. Investor confidence in luxury brands like Ferrari is often quite strong, especially when the brand has a history of profitability and exclusivity. By separating from FCA and establishing itself as a standalone public entity, Ferrari might attract investors who believe in the value of luxury brands. However, there's also the risk that increased scrutiny from investors and analysts could push Ferrari to focus more on short-term financial performance rather than long-term brand building. For Fiat Chrysler, the separation could have a significant impact. On one hand, they get a large influx of cash from the IPO proceeds, which can be used to pay down debt or reinvest in other areas of the business. On the other hand, losing Ferrari means they are parting with a highly profitable segment of their portfolio. How might this affect FCA's stock price and overall market strategy in the long run? These are some of the broader strategic questions to think about as we analyze Ferrari's move to go public. How does the IPO fit into the competitive landscape of the luxury automobile industry? And what might this mean for Ferrari's long-term brand value and equity? Reflect on these points as you develop your discussion during the week. Leveraging prior case studies for valuation insights. Refer to Case 43 for detailed examples of valuation methods used in mergers and acquisitions. This case will provide a solid foundation for understanding various valuation techniques and their application in different corporate scenarios. Adapting valuation tools for Ferrari's spinoff context. Although Ferrari's case involves a spinoff, which is structurally different from merger and acquisition scenarios, the valuation principles applied are similar. Utilize these well-established methods to estimate the value of Ferrari as an independent entity. Valuation techniques to be employed should include the following. Discounted cash flow or DCF analysis. The DCF method is a cornerstone of intrinsic valuation, focusing on the present value of projected future cash flows. Apply this method to forecast Ferrari's free cash flows, discounting them back to their present value using an appropriate discount rate that reflects the risk profile of the company. Market multiples. Market multiples provide a comparative approach to valuation, benchmarking Ferrari against similar companies within the industry. Consider multiples such as price to earnings or PE and enterprise value to EBITDA to determine Ferrari's market value relative to its peers. Book value. The book value approach looks at the company's balance sheet to determine the net asset value or NAV. For Ferrari, this method may provide a floor value as it primarily accounts for tangible assets while potentially undervaluing intangible assets like brand equity. Liquidation value. Although less applicable to a premium brand like Ferrari, understanding the liquidation value offers insight into the absolute minimum value of the company based on the premise of selling all assets and paying off all liabilities. Next, let's discuss the methods for valuing Ferrari and setting the initial public offering price. Discounted cash flow. The DCF method involves forecasting Ferrari's free cash flows and discounting them using an appropriate discount rate to derive the present value. This approach provides a fundamental view of Ferrari's intrinsic value, but it is sensitive to assumptions about growth and discount rates. Market multiples. Using market multiples like enterprise value to EBITDA, we compare Ferrari to other luxury brands and automakers. This method reflects how the market values similar companies, but may introduce some bias if the selected comparables are not perfectly aligned. Choosing the right method. Ask yourself, do you trust the market's assessment of Ferrari's peers, or do you prefer a more detailed analysis of Ferrari's own cash flows? Each method has strengths and limitations, and your recommendation should clearly justify your choice. One of the key tasks in this case is to estimate Ferrari's value, in euros of course. Exhibit 8 provides financial projections, but do you agree with those assumptions? Consider how growth rates, margin improvements, and market expansion are reflected in these forecasts. Valuation approach. Whether you choose DCF, market multiples, or some other method, clearly outline your process. For instance, discounted cash flow. Explain how you determined the discount rate and the long-term growth rate. If using market multiples, discuss which companies you selected as comparables and why. Are they luxury brands like Hermes or high-performance automakers like BMW? Consider alternative methods. Would a book value or liquidation value approach even provide additional insights? Why or why not? Finally, let's turn our attention to recommending a price for Ferrari shares on the New York Stock Exchange. In dollars in this case, of course. This will require a conversion from euros to dollars. When determining your recommended price in US dollars, remember to account for exchange rates at the time of the IPO. Market sentiment and underpricing. Should Ferrari price its IPO conservatively to ensure larger market uptake, or should it aim for a higher price that maximizes proceeds for Fiat Chrysler? Think about the trade-offs between investor demand and achieving a valuation that aligns with Ferrari's premium image. As a key discussion point, what price would you set and why? Consider both the quantitative valuation and qualitative factors like brand perception and market conditions. As you perform the necessary research and prepare your posts for this week, think critically about the following. Financial health and strategy. How do Ferrari's strategic decisions impact its financial forecasts? Valuation analysis. What assumptions are you making in your valuation, and how do these impact your price recommendation? Engaging with classmates. Remember to provide thoughtful feedback on at least 2 of your peers' posts, focusing on how they approached the valuation and their reasoning behind their IPO price recommendation. As always, include at least 1 solid APA reference to support your response with each of your peers. In wrapping up our discussion thus far, here are a few key takeaways. Ferrari's IPO is not just a financial event. It is a strategic move that has lasting implications for both Ferrari and Fiat Chrysler. Understanding the balance between growth and exclusivity is crucial to evaluating Ferrari's valuation. Keep in mind, there is no single correct valuation method. Your ability to justify your choice and assumptions is what counts. I look forward to reading your analyses and seeing how you apply these valuation techniques to this iconic brand. Be sure to post by Wednesday and engage thoughtfully with your peers throughout the week. Have a great discussion, and remember to post at least 3 times on 3 different days during the week. This concludes our live chat segment for now. As always, let me know anytime you have questions about the course. See you online.